Joining me now is John Carey, Deputy CEO of Adnoc Distribution, on their first Capital Markets Day in London since they IPO. John, good to see you. Welcome to Bloomberg. You're going to sit in front of an international investment audience. What is the key message about growth in revenue that you're going to deliver today in London?
I think the key message today in terms of our growth is that, we have identified clear and clear strategic objectives and initiatives to deliver over $1 billion of EBITDA by the end of the strategic period. So that's through the key initiatives that we've identified and we're going to talk to our investors about here in New York tomorrow and in London today.
Now, you've already upped the dividend. That's very much in the price. In that audience today, is that going to be part of the message? We are a core dividend provider and therefore look towards our market here in the U.A.E. as an investable dividend play.
So I think the dividend play it's certainly been a very strong message, but it really is an and conversation. We can deliver strong, sustainable payouts to our investors and shareholders, but as well as that, we have plenty of headroom and capacity for future growth. So it isn't just a dividend play. We've always said that. 63% increase in dividend is a strong figure. But this company is about growth. And the outlining of those objectives today and tomorrow are very much focused on our growth agenda, Manus.
Now, John, look, you and I have spoken on a number of occasions. You've said to me, I want to expand into Saudi Arabia. A number of people in the marketplace here say, why do you want to go towards Saudi Arabia, perhaps where the margins, some would say, are slightly lower than they are versus the U.A.E., your core market? What do you have to say to that?
So when we're talking today, we will talk first and foremost over the next 2 to 3 years about growing within the U.A.E. So this isn't about making those choices between the U.A.E. and internationally. Again, it's an and conversation. We will grow in the U.A.E. We have grown very significantly over the last 18 months in the U.A.E. We've now got 4 sites in Dubai, and we will talk today about opening in excess of 10 sites in Dubai this year, and a similar number over the strategic period per year. But we've also grown very significantly in the first quarter. Our revenues from our convenience stores grew over 30%, Manus. And therefore, within the U.A.E., we have a very strong performance and a growth trajectory within that. What the international piece gives us... Yeah.
Sorry, go ahead.
So what the international piece gives us, Manus, is the ability to grow also longer term. We know Saudi Arabia has quite a disparate fuel market today. We have opened 2 sites there. We've seen positive results from that, but we will continue to learn from that. And in our lubricants business, we see our lubricants business as a very international business. And we talked the last time we spoke about India. We're now building that business in India, a market, the 3rd largest lubricants market in the world, but also the fastest growing synthetic lubricants markets in the world. So we want to take a part share in that and make sure we get those returns to the investors. But overall, we have said all along, we have a very strict and clear policy around our investments of greater than 15% IRR. So we are disciplined, we're patient, but we have a lot of growth opportunities in our pipeline today. And what we want to tell our investors is we have the choices. We have starting to build the track record. I think we have the track record of showing discipline when we invest and delivering the results.
Cost cuts, never far. I mean, if I'm not asking you about dividends, I'm asking about cost cuts. What is the agenda in terms of efficiency? Because it has been core to our conversation.
It has, and we're again outlining, we saved over $50 million in 2018. Manus, we delivered in excess of that. We are identified and have identified a further $50 million saving for 2019. And then we're saying over the strategic period, we believe there is a further $50 to $100 million of cost savings and efficiencies. Look, Manus, the market's changing. How we interact with our customers are changing. Payments, digital, etc. are coming in. We need to be more effective and efficient and utilize those to deliver cost efficiencies for our investors, but also for our customers.